Hello, we are the Incredibles and today we will present the job description along with the software used by the bookkeeper. The emergence of information technology changed the way information is handled. It permits people to store, transmit, retrieve, develop, and manipulate information. In the business environment, IT systems enhance business productivity, help companies make decisions, and support a huge amount of information exchange daily. An example of someone that relies exclusively on IT systems is the bookkeeper. In the next slides, we will explain the tasks performed, the information bookkeepers use, the way data is transformed into meaningful information, and an IT system that meets the needs of the bookkeeper. The bookkeeper contributes to the preparation of financial records for a company and handle accounting duties. These financial records are kept in ledgers, which most people know as the books. In these ledgers, bookkeepers journalize all financial operation business do during the operational cycle, which may be monthly, quarterly, or yearly. In addition, the range of duties bookkeepers have is affected by the size of the firm. For instance, small firms will require bookkeepers to do a large range of duties, while in large firms, bookkeepers will have fewer duties. To gain experience, bookkeepers may begin as an accounting clerk to understand and get used to the business atmosphere. When the bookkeepers gain enough experience, they will work on more accounting-related duties, including bank reconciliation, preparing balance sheet, and income statement. They will also follow the guidelines established by general accepted accounting principles, best known as GAAP. Bank reconciliation. One of the major tasks bookkeepers do is bank reconciliation. At the end of each month, the bank gives firm a bank statement where it describes the transaction made during the month. Often the balances of the bank and company are not the same, so they must reconcile the difference to reach a final balance. This slide provides an example of a bank reconciliation. The example shows two sections, balance per bank statement and balance per deposited books. These two sections will have the same ending balance. The following information is the bookkeeper needs to produce bank reconciliation. The first one, deposit in transit. End of month deposit of cash, the depositor records in the current month and the bank records it in the following month. The bookkeeper will add this deposit to the ending balance of the balance per bank statement. The second information is outstanding checks. The depositor writes checks that should be recorded immediately, but the bank may record them until the next month. Bookkeeper needs to subtract it from balance per bank statement. The third information is bank charges. Bank charges deposited for some items, such as not sufficient funds, the depositor may not be aware of until the receipt of the bank statement. Bookkeeper deducts these charges from balance per deposited books. Bank credit, collection or deposit by the bank that will benefit depositor, but the depositor does not know about it. The bookkeeper adds this credit to balance of the deposited books. The last information is bank or depositor errors. Errors committed either by the bank or the depositor. The bookkeeper can either add them or subtract them to the balances of bank or depositor depending on the situation. For instance, if the depositor incorrectly recorded a check for more money than what the clear really was, it will add the error to the balance of the depositor. When the bookkeeper has all the information needed, he or she will produce the bank reconciliation and will make adjusting entries for the addition and deduction of items of the balance per deposited book section. These adjusting journal entries are needed to have correct financial record and not mislead investors when reading the financial records. Balance sheet. Another task performed by the bookkeeper is the preparation of the balance sheet. The balance sheet is divided into two sections. The first section is composed of assets that are further divided into current and non-current assets. Current assets are assets expected to be consumed or changed into cash in 1 year or operating cycle, whichever is longer. The following are examples of current assets bookkeeper needs to produce the balance sheet. The first one, cash and cash equivalent. Cash and short-term investments are very liquid and will mature within 3 months. Receivables, or promises of purchases to pay goods and services sold. Bookkeepers should anticipate loss due to uncollectible receivables. Not all the money will be collected from the purchasers. The third information, short-term investment. Bookkeeper will Group investment of a firm as held to maturity, which are securities expected to be held unto maturity. Trading, securities bought to be sold in the near future and available for sale. These are securities other than the trading or held to maturity. The securities may be either debt or equity. The next asset is inventories. Bookkeepers will determine the basis of valuation and the cost flow assumption to record inventories. Finally, prepaid expenses. It is the amount of unexpired costs. For instance, prepaid rent or prepaid insurance. Bookkeeper uses this information to calculate the expenses the firm had during their cycle. On the other hand, non-current assets are assets that will be consumed or converted to cash in more than a year or operating cycle, whichever is longer. The following are examples of non-current assets. For instance, long-term investments. These are investments may be investment in security, investment in tangible asset, or cash set aside for a special fund. Bookkeepers will need the long-term investments. The company has to journalize in the balance sheet under the section Investments. Fixed assets. These are assets that have a greater life than 1 year and are not for resale. It is also known as property, plant, and equipment. The bookkeeper is responsible to monitor these assets and later include them in the balance sheet. In addition, the bookkeeper needs to follow a depreciation method, usually the straight line, to allocate the depreciation of fixed assets. The bookkeeper will put fixed assets in the balance sheet under the long-term assets section and the depreciation in the income statement as an expense. Accumulated depreciation is subtracted from each of the fixed asset entry in the balance sheet. Intangible assets. These are assets that do not have physical substance and are not financial instruments. Examples are patents, copyright, and goodwill. The bookkeeper will amortize these assets over their useful lives. Other assets. It is a wide area. It may include long-term prepaid expenses, deferred income taxes, and restricted cash. The second section of the balance sheet is composed by liabilities, which are obligations a company has that may be classified as current or long-term, and equity, residual interest in assets that remain after subtracting its liabilities. First, liabilities. Current liabilities are obligations a firm expects to cover through the use of current assets or the creation of current liabilities. For instance, accounts payable, acquiring goods by credit, collection, receiving advance, which is unearned revenue, and paying a portion of a long-term debt are current liabilities. Long-term liabilities are obligations expected to be paid after normal operating cycle. For instance, bonds payable, notes payable, and deferred income tax. This obligation may arise of issuing bonds, lease operation, and normal operation of the company. For instance, a company may obtain money by issuing bonds which will require them to pay the bonds in the future. The bookkeeper is responsible to cover or pay these liabilities. Owner's equity. Owner's equity is divided into capital stock, which is the par value of shares issued by the company, additional paying capital, excess of amount paid over the par value, and retained earnings, which is the corporation earnings that the company retains for its own use. The bookkeeper needs to know the number of shares authorized, issued, and outstanding to calculate the owner's equity. When the bookkeeper knows the information of the entry described above, the bookkeeper uses the information to produce the balance sheet. The bookkeeper will not be the only person doing the balance sheet. For instance, in a large corporation, an expert accountant will be in charge of several things, such as taxes, while the bookkeeper will work on other things. Total assets must equal the sum of liabilities and owner's equity. The income statement. The preparation of the income statement, which measures the success of a firm's operation, is another task performed by the bookkeeper. Revenue and expenses is the information needed by the bookkeeper to prepare the income statement. This slide shows the income statement for Walmart. It begins with total revenue, usually comes from sales. Then it shows different expenses, including operating and selling expenses. The next section, which is labeled Income from Continued Operation, includes other revenue and expenses not related with the natural business operation of Walmart. At the end, revenue minus expenses equals net income. Statement of cash flows. The bookkeeper is also responsible for the statement of cash flow. To prepare this statement, the bookkeeper will need the operating, investing, and financing activities of the company. The operating section includes any change in cash that affects net income, such as cash receipts or cash expenditure. The investing activity includes information about long-term assets, such as collecting loans, acquiring and disposing long-lived assets. Finally, the financing section includes any change in cash involving liabilities and owner's equity, such as issuing bonds, payment of cash dividend, and sale of common stock. The bookkeeper will reconcile the beginning and ending balance for the period to report any change in cash received, cash payment, and net change caused by the operating, investing, and financing activities. The bookkeeper will most likely not complete the whole statement of cash flow. However, they will help by journalizing entries for this statement. Once the bookkeeper prepares the financial document, he or she will present the statement to upper level, including an accountant and controller, to verify the credibility of the statement. There are other daily tasks performed by the bookkeepers, such as payment to customers, to third parties, and payments received in the company. The bookkeeper will use, for example, payment to customers and record it in the financial ledger and put it on one of the financial statements. The bookkeeper must have information of the different customers or clients they have to correctly record any expense or revenue. Many firms are always in project planning. It is important to know that the bookkeeper assigns costs of different activity, expenses, and employee to different projects. The bookkeeper will need information regarding past project planning and current financial resources to better allocate costs to certain projects. Also, the bookkeeper needs to have excellent communication skills to interact with accountants, controllers, CEOs, and any person interested in the financial situation of the company.
Before software, bookkeepers 50 years ago would have to do everything by hand. They would then hand their reports to a typist in the office, and they would type everything up. Fortunately, today there is software that allows bookkeepers to do everything bookkeepers did then, except with less mathematical errors and information that is more current. The software system we thought would suit a bookkeeper well was built by BQE Software. The key benefits outlined by the software system are time and expense, business automation, accounting, and bank reconciliation. The time and expense function allows the bookkeeper to keep track of liabilities in multiple currencies. We need to keep track of liabilities in order to get our financial statements together at the end of the month or year, whichever it may be. The way BillQuick does this is by keeping track of how much overtime is to be paid, how much compensation time has been accrued, and it accounts for sick, vacation, and holiday leave. Because of increasing globalization, keeping track of multiple currencies could prove to be an important feature. The purpose of business automation function is to allow the bookkeeper to keep track of expenses and liabilities, the assignment of costs of projects, and project management. Project management will allow the bookkeeper to keep track of different projects by allowing the bookkeeper to see which projects are operating at a loss and which projects have not adhered to their project. BillQuick assigns overhead costs to projects so that management can see what services are costing too much and be outsourced for less. Project management also has features that allow the bookkeeper to keep record of documents such as vendor bills, invoices, and expense records. This graph shows how BillQuick separates a company's projects, gives the option to switch to other information such as time and expense, and provides graphs so that the bookkeeper can compare the performance of projects. This function keeps track of accounts receivable, accounts payable, the financial statements, and inventory. This software streamlines processes such as accounts payable, billing, accounts receivable, general ledger, projects, and time and expense. To create the financial statements, a business first needs to set up a chart of accounts. BillQuick has this feature. Next, the information is transferred to the ledger, which is the main file used for recording and calculation of transactions that a bookkeeper has recorded. There are three ledgers: the sales ledger, the purchase ledger, and the general ledger. This information is then transferred to the unadjusted trial balance. Following the unadjusted trial balance is the year-end adjustments, and finally the trial balance. The information provided by the trial balance is eventually used to make the balance sheet, income statement, and the statement of cash flows. BookQuick also has a function called the Collection Center. This allows the bookkeeper to gather all relevant information such as payment history, key data used by the company, and notes related to the accounting in one place. The Accounts Payable function allows the bookkeeper to control what bills are paid, when and from what account, as well as allowing the bookkeeper to write checks by using the check stock provided by BookQuick. BookQuick allows the bookkeepers to reconcile bank statements because one of the duties that a bookkeeper unquestionably has is the preparation of bank reconciliations. This diagram shows how BookQuick helps bookkeepers do the bank reconciliation. The bookkeeper will enter the date of the bank statement that will be reconciled in the statement date field. BookQuick has fields to enter service charge, interest earned, bank deposit errors, and all the parts that form the bank reconciliation. Once the bookkeeper enters the information in the open fields and clicks the Reconcile Now option, BookQuick will give the bookkeeper the bank reconciliation with all the information they previously inputted. Because there is a basic, professional, and enterprise option, BookQuick can be used for any type of business. There is a cloud option that will allow the bookkeeper to access this program via their smartphone or their tablets. BookQuick can be used by Microsoft Windows 7, Vista XP 2008 and 2003. For Macs, users will have to use BookQuick Web Suite. Competitors of BookQuick include Intuit QuickBooks and Sage 50 Complete. Sage 50 Complete is probably the highest rated out of all of them, but the most expensive. Intuit QuickBooks was also found to be more expensive at $500 a year compared to the $299 that will be spent on BookQuick. The three software systems offer the same basic accounting functions that a bookkeeper could possibly need. In the end, the cost of the software system is the component that determined BookQuick to be chosen over the other two software systems.
As mentioned before, the bookkeeper has a big commitment with the company by performing bank reconciliation, accounting for daily operation, and preparation of financial statements. An extensive list of information bookkeeper uses was provided along with the system BookQuick, which meets the needs of the bookkeeper. BookQuick features including Collection Center, project management, and bank reconciliation helps the bookkeeper transform the information he or she uses into meaningful information, such as balance sheet that will be used by the top level management and investors to make decisions. In addition, BookQuick is better economically than other software, and it may be accessed from computer, tablet, and smartphones. Thank you.